Alright guys, so welcome to the part 2 of the Q&A on the valuation of goods or services under GST. In this part we will take the Q&A on how to determine the value of goods or services under the valuation rule. And the first question of this part 2 of Q&A is, what are the circumstances in which the supplier need to look at the valuation rules? So the question is, what are those situations in which the supplier of goods or services need to look up the value of supplier goods or services under the valuation rule? So there are 2 or 3 situations in which the supplier need to look at the valuation rule. First one is, when we already discussed in the part 1, is that when the supplier or recipient is related or where the price is not the sole consideration. In those cases we have to look at the value as per the valuation rule. We have to calculate or determine the value as per the valuation rule. So that is the first situation. The second situation is when the supply of services is in case of an agent. So when you are an agent, so you don't need to check out the section 15 subsection 1. You have to mandatorily calculate or determine the value as per the valuation rule. And the third situation is the special circumstances in which you have to look at the value as determined as per the valuation rule, because that are the special cases and you don't have to follow section 15 subsection 1. It is not withstanding with section 15 or section 15 subsection 1. So you have to look at the value, you have to calculate the value as per the valuation rule in case of a situation, in case of a special circumstances like the services in relation to the purchase or sale of foreign currency. Those person who exchange the foreign currency, who are the exchanger of the foreign currency, need to look at the value as per the valuation rule. The second one is as a service of booking of ticket for travel. So the travel agency who book the ticket will also need to calculate the value of their services as per the valuation rule. And the third one is that the services in relation to the life insurance business. So if you are in the life insurance business like the LIC or some life insurance businesses, then the valuation of the services will be determined as per the valuation rule. We will not discuss about these 3 situations in this video because that is a really rare situation, because a lot of people don't want to really know about the valuation in those situations. But if you want to know about the valuation in this situation, then you can ask me the specific query related to that on the email ID sharvangst.148. We will know that how to calculate the value or how to determine the value of supplier goods or services in those 2 cases in this part. The next question is relating to the valuation of goods or services in case the consideration is not wholly in money. And the question is how to determine valuation of goods or services in case the consideration is not wholly in money. So the answer of this question is given under the valuation rule, and the rule number 1 of the valuation rule talks about it. So in case the consideration is not wholly in money, then we have to calculate, we have to determine the value of goods or services as under. So rule number 1, clause number A says that the value of such supplier goods or services can be taken as the open market value of such supply. So for example, you have a shop of mobile phone, and suppose you are selling the mobile phone, and during the selling you got the 20,000 rupees for that phone, plus you also exchange, you also got some old mobile phone. Then in those cases, how to determine the value of goods or services? In the case the valuation of the mobile phone will be the open market value of such supply, means the open market value of that mobile phone. So we have to take up the open market value of that phone. So suppose in this case the open market value of the phone was 24,000 rupees. So we have to take up the valuation of goods as 24,000 rupees. So in this case, suppose you got the 20,000 rupees in your pocket plus an old used mobile phone, then we will not take the 20,000 rupees the value will be the open market value. And the open market value, suppose the value, or you sell those goods, you sell those mobile phone in the open market for 24,000 rupees. If you don't exchange it for the old phone, then those will be the valuation as per the rule number 1, clause number A. And the second clause is that the open market value. So second clause of rule number 1 says that if the open market value of the such supply is not known at the time of supply. So suppose in our case, if you don't know the open market value of the mobile phone, then how the valuation will be done? I know that that will be a very rare situation in which the open market value will not be known, but let's say the open market value of such supply is not known, then how to value the goods? So clause number 2 says that if the open market value is not available, then the valuation of goods will be the sum total of consideration in money, the sum total of consideration which you got in your pocket, and such further amount in money as is equivalent to the consideration not in money. So in our case, suppose you got the 20,000 rupees plus the old mobile phone. So if you don't know the open market value of the mobile phone, then the valuation will be 20,000 rupees plus such further consideration in money as is equivalent to the consideration not in money. So we have to add up the amount which you got in your pocket plus the amount of the additional item. So we have to, like in the exchange old phone, if you know the value of the old exchange phone, then we have to add up those value into the money which you got in your pocket. So suppose for example you have the laptop and you are selling the laptop for 40,000 rupees plus you are also bartering it for the printer. So you got the 40,000 rupees in your pocket plus you got another a printer, 40,000 rupees plus you got the printer from the recipient of that laptop. So now how the valuation will be done? According to the rule number 1, the valuation will be the open market value of the laptop, but in our example we don't know the open market value of the laptop. I know that will be a very rare situation, but let's say the open market value is not known at the time of supply. So how to value? Rule number 2 says that you have to take up the consideration in money, which is 40,000 plus the consideration of that one, barter of printer. So suppose the value of the printer is 4,000 rupees. So as per clause number 2, the valuation will be 40,000 plus the value of the printer, which is suppose 4,000 rupees. So the valuation will be 44,000 rupees. And the third one is that if we cannot determine the value as per clause number 1 or the clause number 2, so when we can say that we can't determine the value as per clause 1 and the clause 2, when we don't know the open market value of such supply plus we don't know the consideration of the additional supply. So suppose in our example, when you don't know the value of the open market value of the laptop plus we don't know the value of the printer, if we don't know the value of the laptop and we don't know the value of the printer, then how to calculate the value? This says then the valuation of that good will be the value of like kind and quality of goods. So suppose the laptop is of SCL and you don't know the open market value of that computer or that laptop, so the valuation will be the value of similar kind and quality of the laptop. So suppose same quality and same kind of the laptop is of Dell, then whatever will be the open market value of the Dell will be taken as the open market value of that SCL. So these are the 3 clauses. Also there are 4th clause which says if we can't determine the value as per clause number 1, 2 and 3, then we have to shift to the rule number 4 and 5 of the valuation rule. We will take the rule number 4 and 5 later in the video. So that's how the value of goods or services will be done in case the consideration is not wholly in money. The next question is relating to the valuation of goods or services in case the supply of goods or services is between the distinct or the related person. And the question is how to determine the valuation of goods or services in case the supply of goods or services is between the related person or the distinct person. So if the supply of goods or services is between the related person or the distinct person, so we have to take a look at the meaning, or we have to take a look at the determination of value under rule number 2 of valuation rule. But the question is, what is the meaning of a distinct person and the related person? The meaning of related person is same as provided under explanation to section 15, and the meaning of the distinct person is look, under GST you have to register for every single place of business in which you make the supply. So suppose you have a two branch, one in a Delhi and one in the Uttarakhand. So you have to register under GST separately for both the branches, and under GST both branches will be treated as a branches or the business of a distinct person. So in case you have two branches and you are the one owner, then those two places will be treated as a distinct person under GST. So if the supply of goods or services made between those two branches, that will be treated as a supply of goods or services between those distinct person. So if you are a related person or you are a distinct person, then the valuation of goods or services will be done as per rule number 2. So we also it is also the question to the query that how to value the goods or services, how to value the supply of goods or services in case of a branch transfer or stock transfer. So if the supply of goods or services is between the related person and between the distinct person, then the valuation will be done as per rule number 2 of the valuation rule, and the valuation will be as under. So if the valuation of goods or services, if the supply of goods or services is made between the distinct person as provided under section number 25 subsection 4 or 25 subsection 5, or where the supply of goods or services is between the related person, then the valuation of goods or services shall be as under. First one is that we have to take a we have to determine the open market value of such supply. So suppose you are supplying the laptop between the related person. I am the one party and another one is my related one, and I am selling the laptop to my related person, related party. Then the transaction value will not be adopted. The open market value of such laptop will be taken as a valuation of that goods or services in this case. And if the open market value of laptop is not known, I know that is a rare situation, but suppose open market value of not known, then the valuation of that goods or services will be the value of like, kind and quality. So suppose I am selling the laptop of a Dell, and the laptop of the Dell, the value of that laptop of the Dell is not known at the time of supply. So we have to check out the value of the like, kind and quality of the another laptop, or suppose HP, or suppose of Intel or some kind of laptop. Then the value of those other laptop of similar kind and quality will be adopted for the valuation of goods or service. And if the valuation cannot be done as per clause number A and clause number 2, then we have to shift to the rule number 4 and the 5 of the GST valuation rule, and we have to calculate the value according to rule number 4 and 5, and then take the value as per that one. So that is the process in case the supply is between the related person or between the distinct person as specified under section 25 subsection 3 or the 25 subsection 4. The next question is relating to the valuation of supply of goods or services made between the principal and his agent. And the question is how to determine the value of supply of goods made through an agent. So the how to determine the value of supply of goods or services made between the principal and the agent. So rule number 3 of valuation rules deals with such a situation. It says that the value of supply of goods between the principal and his agent will be determined as follow. So clause number A says that we have to take a look, we have to take the open market value of the goods which the agent receives. So suppose the agent deals in the mobile and the principal sends the agent the mobile of the Sony company. So whatever will be the open market value of the Sony mobile can be taken as the valuation of that goods. Or another option is given to the principal that if the principal don't want to value the goods as per the clause number A, which is the open market value of the goods, then the supplier has also an option to determine the value as per clause number B, and the clause number B says that you can take the 90% of the price charged by the agent to his customer of the goods, of the supply of goods of like kind and quality. So the supplier can take the value as the 90% of the price charged by the agent to his customer of the goods which are similar in kind and quality. So suppose the agent sells the goods, sells the mobile of Sony company to the agent, and the agent also sells that mobile to another customer. So what that clause is saying, that the supplier, which is the principal, can take the 90% of the value, 90% of the amount which the agent is selling the goods to the customer. So the supplier has the option to take the 90% of the goods, 90% of the value which the agent sells to his customer. So for example, the open market value of the Sony mobile is 20,000 rupees. So as per clause number A, we can take the 20,000 rupees as the valuation of that mobile. But if the supplier or the agent, if the supplier, which is the principal, want to move to the next clause, which is clause number B, then how to value? So suppose the agent sells the mobile of the like kind and quality, and the mobile of like kind and quality means mobile of Sony which is received through another principal. So suppose an agent has a two principal. First principal sells the goods to the agent, and another principal also sells the goods to that agent. So whatever the agent sells the goods to the customer of another agent can be taken as the valuation of that goods, and the 90% of the price charged by the agent to his customer will be calculated as the valuation of goods in that case. So suppose the agent sells the mobile to his customer of like kind and quality of 25,000 rupees, then in the clause number B we have to take the 90% of the 25,000 rupees, which will be 22,500. So the supplier or the principal has the option to take the 22,500 rupees, or he has the option to take the 20,000 rupees. So the next clause is has the option, the supplier or the principal has the option to take the 90% of the price charged by the customer, charged by the agent to his customer of the goods of similar kind and quality. And if we can't determine the value as per clause number A and B, then we have to shift to the rule number 4 and 5, which will determine that how to calculate, how to determine the value of goods in that case. Alright guys, so this is our last question, and with this we will end this part. The question is, if the supplier is not able to determine the value of goods or services as per rule number 1, 2 and 3, which we just discussed in the previous clip, then how will he calculate the value for charging the GST? So you got the rules and you apply rule number 1, 2 and 3, but you still don't able to find out, don't able to determine the value of goods or services as per rule number 1, 2 or 3. Now how you have to calculate, how you can determine the value now? So what are the cases or the situation in which you are not able to find the value of goods or services as per rule number 1, 2, 3? So suppose you don't know the open market value of such supply of goods or services, or you are not able to find out the open market value of the exchange item, or you are not able to find the open market value or the market value of the like kind and quality. So in the three situations, when the open market value of such supply of goods or services is not determined, when the open market value of the exchange item is not known, or when we don't have any goods or services of like kind and quality, then we have to shift on to the rule number 4, which says that where the value of goods or services cannot be determined by applying the rule number 1, 2 or 3, then the value will be the 110% of the cost of manufacturing, cost of production, or the cost of acquisition of such goods in case you are trading, or the cost of provision of service. So you have to calculate the cost of manufacture or production in case you are a manufacturer, or the cost of acquisition of goods in case you are a trader, or the cost of provision of services in case you are a service provider, and then 110% of such cost will be treated as the value of such supply of goods or services. So now the question is, what will be the example of such cases in which we have to calculate the value as per rule number 4. So suppose I am a chartered accountant and I want to build a house, and for that I want an architect service. So I go to the architect and tell him that I want your architecture service, and the architect says to me like, I will provide you the architect service in free of cost, provided you also file the return of my financial year, you also file the return of my business in those financial year. So in this case, we are providing the service to each other without any cost. So how to determine the value in this case? So suppose the rule number 1 says that you have to find out the open market value of such supplier service. So can the architect find out the open market value of such services? No, because the architecture service is special to every situation. Suppose I want to build a large house and it is very complicated, then we can't able to find out the open market value of such service, and also we can't able to find out the exchange one, because in my case also in the exchange one, like I am filing the return to him, because I also charge separate consideration for each of the clients. So also my consideration is not known, and also the service of like kind and quality cannot be found in my case also. So therefore we have to move on to rule number 4, and the rule number 4 says that the architect have to calculate the value by applying the rule number 4, which is the 110% of the cost of provision of service. So in his case, he has to calculate the cost of provision of architecture service and then apply the rule number 4, and the 110% of whatever will be the cost will be the value of supply of architecture service in that case. Alright guys, so thanks for watching the video. If you want to check out the part number 1 of this video, then you have to click right here, and if you want to subscribe to my channel, then click right here, and please make sure that you turn on that damn notification button. It looks like this icon. When you turn on the notification button, it will notify you whenever I upload the video, so make sure that you turn on that button. Subscribe the video, share the video, like the video, because it help me to motivate and create the more content, and which in turn help you to get the knowledge about the GST. Alright guys, so we will meet in the next video. Till then, bye bye.